In my opinion, the analysts have SoFi totally wrong. We're currently seeing the analysts putting SoFi in at a general consensus of a hold, with 5 only putting this as a strong buy currently, 2 at a buy, 10 at a hold, 3 at a sell and 2 at a strong sell. There's certainly a wide mix within the analyst sphere of where exactly SoFi can head. And in this video, we're going to be going over my formulas and where exactly I predict SoFi to go for the next year and beyond. So strap in and let's get straight into it. We're seeing articles currently such as could buying SoFi stock today set you up for life, and this article is a bit of a mixed bag. For example, the downside of SoFi's share price rising so quickly is that it has significantly raised its valuation, making it priced for perfection. It has a price to earnings ratio of around 50, much higher than the average PE multiple of 29 for the S&P 500 index. And we're also seeing articles such as why we see a 100% upside in SoFi over the next 3 years, which of course I agree with, and that's the point of this video. With the overall consensus and takeaway from this article being that Seeking Alpha builds a bullish long-term case on SoFi, emphasizing accelerating revenue, margin expansion, and the path to $1 billion in profit by 2027, all underpinning expectations of a 100% upside in the next 3 years. We are now, of course, seeing SoFi stock rally up to a massive, margin, of course. Just very quickly, it is Tuesday as of recording this little section. The remainder of this video was filmed a few days ago, and it still stands to be sound evidence for why this will continue to rally, but I do need to quickly add this in. So we have now seen SoFi stock fall straight through this fair value gap, and today is looking to be quite a bearish day. However, we are now seeing this potentially form a hammer, and going off of what happens tomorrow when this video is out, will basically depict where this is going to go. Obviously, right now, SoFi is being manipulated by broader macro and larger market trends. It's basically doubled in price since its low here in April, and it's something in which I have been waiting for, and as a momentum trader I have been capitalizing on this exact moment. For example, we are now coming up to potential all-time highs in the coming weeks and months, and if it does manage to break this, I do think the rally will continue, and I do expect analysts to adjust their price targets along with the current price, because again, analysts do not like to be wrong in these situations. If the price starts hiking, whoever's down here at a minus 71% price target, they're going to start to think, right, we need to start rising this price target, otherwise we're going to look a bit stupid. But of course, they're not going to jump up a massive amount, but it will certainly lead to a certain amount of FOMO within the market when these price targets do eventually start to increase. But will we see that in the near future? Possibly not. We will want to see sustained growth within the stock, not just a brief climb up. So why exactly am I really bullish on this stock? Well, in this section of the video, we're going to be going over their financials and intrinsic valuation, which I've conducted myself through my own system. So stick around and let's get straight into this. So retention rate basis, this is how much money stays within the company, essentially profit and loss. And on an average per quarter, SoFi brings in 16.2% retention, which is actually really good, especially for a company as relatively new as SoFi. Obviously, it's not as new as many people think, but it is certainly still a really, really impressive number. On a liquidity basis, this isn't as impressive. This is down at 0.83, which essentially means that for every dollar of debt in which this company owes, they only have 83 cents to pay this back in. Not ideal. And when you pair this with their free cash flow being consistently negative, then you can basically say that is certainly a cause for concern. And I do see why some analysts are concerned about this. However, it needs to be noted that SoFi is not a tech platform. They are still a bank and a lender, and lending businesses often tie up cash because they fund loans up front. For example, when SoFi originates personal or student loans, that cash essentially goes out the door immediately, and I think that could certainly be a reason as to why their free cash flow is not ideal. Furthermore, they have seen heavy investment growth as well as many other factors which will inherently impact their free cash flow. So it's fair to say that it's still a cause for concern, but it's not the end of the world because that's kind of the business model. But again, as a heavy investor, which I'm not personally, but if you're a big dog, you would certainly see that and think, I might stay away. So looking here at a 365-day exponential chart, if I move my head, I might as well go invisible now. We can see here we are now above the 365-day exponential moving average, which is really good, and volume is correlating to the price to a certain degree. However, the last couple of weeks certainly look as if volume isn't chasing suit as much as we would like to see, indicating that potentially this price is not as supported as we would actually like. So here, looking at a normalized distribution bell curve, we can see that the probability of a positive day here is at 55%. A negative day is at 36%. Of course, SoFi hasn't actually had the best of years, but then again, when you do zoom out for the whole year, it does look ideal. I'm just thinking the last 6 months where we've seen this just go sideways and downwards. So looking here down below, we can see the growth figures for SoFi. So they currently have an earnings per share of $0.41 and a growth rate projected by the analysts of 63.8%. Now, if we look at their surprise rate as well, we can see that this is consistently good, and the mean surprise comes in at 51%. Now, this is a driving factor for this model here, which is Graham's formula. So here we can actually see the intrinsic value for SoFi stock, and looking here on the left, this is the bullish formula. So this yields a result of $76 for this year's growth, and obviously with the current price at 71, that suggests a massive upside and way higher than where any of the analysts are pricing this in. And on the bearish side, this is still coming in at $39. If you add a margin of safety of 25% onto this, we get an acceptable buy price of $57 and $29, which is still way above where we currently are, indicating that SoFi looks to be a great stock for this year. If we look here at Peter Lynch's valuation, we can see that SoFi comes in at a score of 3.6, which is obviously very undervalued. So again, another really good score for SoFi. And my own formula, in which I handcrafted myself, gives me a result of $80.17, which is obviously incredible, again with an acceptable buy price of 60, and this accounts for way more than any of the other formulas. It accounts for retention rates, which was the bell curve which we went over, free cash flows, which is obviously not ideal but it's still yielding a good result, earnings per share, of course, price to earnings ratio, shares outstanding, growth rates, WACC rates, and you name it. So this basically goes over it. However, where we do see this take a turn for SoFi is their discounted free cash flow analysis, and this is just because their free cash flow, as we went over earlier, is really not ideal. So we're actually seeing here this stock is worth negative money on a free cash flow basis, which makes sense because they have negative free cash flow and they're not really growing. It's kind of just jumping all over the place. So for me, if you are a short-term investor, I'd say it's something that's ignorable. However, you're not going to see massive amounts of investment into a company when their free cash flow is consistently down. So it will certainly still have a massive role to play. And to summarize all of these intrinsic value results, you can look here. So for me, SoFi looks to be set up in a glorious way. It's currently in a bullish crossover on the moving average convergence and divergence, which is where this 50-day EMA crosses above the 100-day EMA. Furthermore, it's also closing consistently well above the 150 and 200-day EMA, which is obviously where a lot of big money looks to buy in. So it's looking as if this momentum is certainly more sustainable than would meets the eye. However, we do need to look at the volume. So we are seeing volume slightly drop off now. However, it's still looking to be relatively high comparable to where it's been in the past. But when you're seeing stocks climbing like this, you want to see more volume being traded, and it's certainly low, which could indicate that the price isn't actually as supported as we would like it to be. So that could indicate that this stock could certainly start to fall off from here. Will it? Well, potentially not, because it is just one factor, but there is still a chance. We are seeing fair value gaps forming within this stock price now, so there is levels of support within that, of course, but I think the next level of resistance will be its all-time high, which from memory is around $25, which, yeah, $26-ish. Don't take that as gospel. That was just a very quick zoom in, but again, I think this stock could certainly start to climb up to those levels, especially in the coming weeks and months, if the macros, of course, go in its favor. We are expecting rate cuts from the Fed in the remainder of this year, 2 rate cuts. If that goes ahead, that will be massive for SoFi, as obviously people will start taking out more loans, increasing revenue for SoFi and Fintech in general. So, I mean, there's just many factors in which will help this company going forward. If we look on a forward PE basis, now, this is where it's a bit weird for SoFi. Their forward PE is at 74, with their trailing PE being at 50 and the current PE being at 50 as well. So we can essentially see here that the forward PE is actually expected to go up from here, which is very odd. And on the topic of analysts, we've seen an actual downgrade from JP Morgan Securities here, basically moving it from a market outperform to a market perform, saying it's basically a hold. In my opinion, it's a bit of a weird move. We're not actually seeing any increases, but I do think now the price is starting to rally. Like I said, these analysts don't like to be wrong, so they will start raising their price targets if it continues to rally from here. But this might actually just continue to start or start to go sideways, and that will certainly put a spanner in the works for a potential all-time high run. So that is SoFi stock, a company in which I think is massively undervalued, and when we're looking at the chart here, it just again looks to be set up in an amazing way for momentum, let alone for intrinsic growth. So I think we may see analysts start to move their price targets. Even if it's slightly higher, it will of course have an effect on FOMO, increasing the likelihood of buying. Broad market conditions look good for SoFi. Of course, we might see those rate cuts, which will definitely intrinsically help the company, but it's something in which only time will tell. So none of this has been financial advice. I'm not telling you to go out and buy SoFi Technologies. This is just my own personal opinion, and if you do invest in SoFi, your capital will most certainly be at risk. With that being said, I hope you have enjoyed this video, and I will see you for the next one.